The 30-year Treasury yield, the ultimate indicator of fear, instability, and systemic risk, just spiked past 5%, almost the highest level since 2007, following another U.S. credit rating downgrade. But this isn't just about yields. This is about something much bigger.
They are risking a fiscal disaster.
But it does mean waning demand for treasuries versus commodities in particular.
Will they have to print more? Will they have to inflate it away?
A global collapse of trust in the system itself, the kind of signal that usually only comes before a reset that will directly impact your savings, your borrowing rates, and the value of every dollar you hold. So why are Treasury yields exploding, and what does it mean for you? How much longer can the U.S. pretend everything's fine following another downgrade? And most importantly, how can you use this information to protect yourself before it's too late? Let's get into it. Moody's, one of the big three credit rating agencies, just pulled the U.S.'s final perfect AAA credit rating score, citing mountains of debt and political instability with no clear plan to fix either. But this isn't just a downgrade. It's confirmation that the rest of the world no longer views U.S. debt as risk-free. And once that foundation cracks, the rest of the system shifts fast. More on what that looks like in a minute. But while this move to downgrade might not come as a surprise to those who have been paying attention, it matters more than most people realize. Just like your personal credit score, when a country's credit rating is downgraded, it becomes more expensive to borrow. But this isn't just another maxed out credit card we're talking about. This is a government, the United States nonetheless, sitting on nearly $37 trillion in debt, already paying $1 trillion annually just in interest. This is where Treasury yields come in. U.S. Treasury bonds are how the government funds our spending. Spending that gets more expensive the fewer people that want to buy our debt. You can think of yields as the interest rate our government pays to borrow money. Investors lend money to the U.S. by buying treasuries, and the yields are their compensation. When confidence in the U.S. is high, the yields are lower because investors aren't worried about being paid back. But as that confidence shatters and investors feel as though they're taking on more risk by buying treasuries, that's when yields rise. Now, historically, the U.S. could get away with borrowing excessive amounts at low rates because it controls the global reserve currency, the dollar. As long as there's demand for dollars, there's demand for treasuries. But now the debt has grown so large at a time when other nations are moving away from the dollar, reducing their dollar dependence, that the United States is approaching a point where they're going to have to borrow more just to cover the interest on their debt. And when a system is eating itself to survive, that's when you know a collapse is close. Something that is not only obvious, but now confirmed by these downgrades that don't even take into consideration the biggest risk of all: governments, specifically the United States, printing money to pay for its own debt. In fact, Ray Dalio, famous macroeconomic strategist and investor, just warned that things are going to get a whole lot worse. But he's not alone in raising the alarm bell, which is why we're seeing central banks repositioning themselves now, something we will talk more about in a minute. But this is because credit ratings downplay the real risk involved. They only evaluate the chance of a government not paying its debt, but they don't take into consideration the more likely outcome that a heavily indebted country will print money to cover their obligations, drastically reducing the value of the currency and therefore the payments that investors will receive. But this isn't just bondholders taking a hit. It's you, it's me, it's everyday Americans. Anyone holding a dollar is at risk when a government chooses inflation. Dalio put it bluntly: for those who care about the value of their money, the risks for U.S. government debt are greater than the rating agencies are conveying. Even U.S. Treasury Secretary Scott Bessent recently admitted that these credit rating downgrades are a lagging indicator in what was probably an attempt to relieve some of the blame from the current administration. And while, let's be clear, this didn't happen overnight, this is decades in the making of government overspending and intervention, calling this a lagging indicator is not a vote of confidence. If anything, it's confirmation that what is coming next is going to be worse. What do you think? I want to hear from you. Do you think that the U.S. can still pull itself out of this debt spiral, or do you think that this is a full-blown reset incoming? Tell me what you think in the comments below, especially because Moody's did not want to pull this trigger. In fact, they have held this perfect AAA rating since 1919. They've held it through recessions, depressions, wars, even Nixon shock and going off of the Bretton Woods system. So for them to choose to drop it now, you know it is so much worse than what they're even admitting. They see what's coming, they're just not saying it out loud. But this should be a wake-up call, not to the US government, but to all of us. Because this isn't just about government's cost rising, this has far greater implications for the US dollar and therefore for all of us. As US Treasuries lose their perceived safe haven asset, it is going to speed up the move away from the dollar. Sell America is a motto that is being floated now as nations and foreign central banks continue to move away from the dollar and into true safe haven assets such as gold. A move that has been cemented over the last 4 years as central banks have bought more gold than at any point in modern history. Q1 of this year already saw 244 tons of gold that we know of, which is already 25% above the last 5-year quarterly average. But it's no wonder. With gold having no counterparty risk, there's no way to devalue it or inflate it the way you can with fiat currency, which is why these central banks are moving away from US Treasuries and into gold. But what does all of this mean for you? Well, rising yields in the short term can mean higher rates across the board. We're talking credit cards up, mortgages up, auto loans up, everything more expensive. Your cost of living will go up while your paycheck stays the same. Your savings lose purchasing power. Your future debt is more expensive. Your wealth is eroded. But if this continues, which at this point, I don't see why it wouldn't, we would be saying that inflation is just the beginning of your worries. Inflation would lead to hyperinflation. And since the dollar is the global reserve currency, this is a confidence currency crisis, one that typically would force a reset, where your dollars are worth next to nothing, and then the government has the ability to come in and revalue or devalue your dollars for even less, leaving you with nothing. But this is why gold matters so much. When currencies collapse, gold holds firm. People realize that gold, not paper, is real money, something that seems so obvious, but is rediscovered again and again through history as fiat currencies fail, which they always do. Which we're watching happen right now, but it's not too late to protect yourself with real, true money. Not fiat currency that relies on debt and confidence and politics to survive, but the same money that has protected people through thousands of years. And if you don't have a strategy in place yet, what are you waiting for? This is the warning shot. The time to prepare is now. You can make sure that you have a strategy in place, that you are protected by talking to one of our expert analysts. Call us at the number below or click the link in our description to set up a time that works for you so you can find out how we can help you create a strategy to protect the wealth you have worked so hard to build. You will be so glad you did this when you can sleep well at night because you have the peace that you are protected. So again, scan the QR code, click on the link in the description, or give us a direct call at the number below, whatever is easiest for you. And in the meantime, I so appreciate you being here. I'm Taylor Kenney with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.